I think white-collar crime's been on the rise because profits are lower in most big companies, and they're trying to find a way to make money. Whether they used to make it, legitimately, and now their profits are way down from what they used to be. So they're going to find ways to make that money. Their lifestyle was high; they want to continue that lifestyle, so they're going to find a way to get the money.
According to author and filmmaker Rory O'Connor, it's inevitable that we will face another financial crisis.
Well, there's this myth that we have on this stable financial system, internationally speaking, and it's exactly that. It's a myth. And if you look over the last 100 years, let's say, on average, there's a financial crisis about every 6 or 7 years. So, in fact, what the reality is that this very dangerous instability is actually built into the bedrock, into the structure of the entire financial system, and that has yet to change. So it's almost inevitable that we're going to be essentially back where we were at some point in the future.
The people who have studied the Wall Street crash, 1929, particularly John Kenneth Galbraith, who's written about the Great Crash, says that a lot of it had to do with fraud and, hustling, various stock maneuvers that were illegal and deceptive. And so, this was part of the reason that the markets crashed. You would think, because of this history, somebody would remember this, because historians have written about it. You'd think that there would be journalists who would point this out, the similarities, the parallels between what's happening today and what happened then. But by and large, they haven't. There's sort of a kind of amnesia when it comes to crime in high places.
And since there is less immediate policing oversight for these white-collar criminals, the numbers have risen over the years.
What were once considered criminal practices were then sort of legalized as regulations, were taken off the books. And so things we used to think of as illegal became sort of legal or operated in a shadowy gray area where the people could manipulate all these financial mechanisms, things that we never heard about back in the old days, like derivatives and whatnot. And these things were often so complicated that the regulators themselves didn't understand them. And so there was a loosening of not only financial standards, but ethical standards as well. And if you could get away with it, then it was considered legitimate.
And so what real effect has white-collar crime had in the overall economy and financial institutions?
If you argue, as I did in my book, The Crime of Our Time, and my film, Plunder, that this whole financial collapse it was brought about by illegal activities and by white-collar scheming and people spending large sums of money to kind of change the legal structure through lobbyists, through financial donations to candidates, that the whole thing is if you will, a Ponzi scheme, a criminal enterprise, then all of the money that's been lost is really attributable to that. We're talking trillions of dollars. I've just come from South Africa where corruption is a big problem, but the corruption there is kind of bits, is minor compared to what we have here. And the fact is that here, there's very little effort to try to bring these people to justice.
It boils down to the fundamental problem in the economy, not only in the national economy, but the international economy, that these large financial entities, the Banks of America, the HSBC, the Credit Suisse, etc., are literally still too big to fail. So we saw recently, for example, with HSBC, they were engaged in the despicable and obviously criminal conduct. And this wasn't just but it wasn't just financial fraud. It was actively laundering money for example, the Mexican drug mafia and cartel. So if that isn't criminal behavior, I don't know what it is. But the decision was made to go for a very large civil settlement of billions of dollars and not to initiate any criminal prosecution. And the reason for that is that it was feared that this bank was so large that if they charged them for their criminal activities, it might not only have a terrible effect on the bank, but it might spread, as we saw in 2008, and infect all over again the entire financial situation. So what we see actually is that in terms of the structure, very little has changed, and in fact, we're set up for pretty much the same thing to happen all over again.
Now, most people in government, you know, when you talk about conspiracies, they dismiss it, ridiculous, 9/11, conspiracy, ridiculous, the Kennedy assassination, conspiracy, ridiculous, okay? They just dismiss all of this as paranoia of the highest level. But in their own laws, they have laws against conspiracies, and they take those laws very seriously, but they direct them against people they don't like the mafia, you know, criminal syndicates, as opposed to financial syndicates like the people on Wall Street, who also work together with others and come up with ways to fix prices or, you know, or to engage in illegal practices. A few years ago, when people warned of these practices and said these crimes were taking place, nobody investigated. The tendency of the government was to try to reach some sort of a deal and get the banks and the people engaging in these practices to pay fines, to have settlements instead of prosecutions, because prosecutions cost money, and many of the people who are prosecutors come out of that world. They have conflicts of interest or ideological preferences supporting the bankers. The consequence is there's been no real vigilant prosecution of financial crime on Wall Street.
O'Connor adds that when these crimes are overlooked, not only will it set an example for the society, but often for top executives at big companies.
Well, not only for the population, but I would say more importantly for the executives, okay? Because they're not stupid people. So let's say you're the executive of a leading bank, and you or people working underneath you had been involved in, as we now see, fixing the lending rates between banks, laundering drug money and terrorist money, packaging totally fraudulently billions, hundreds of billions of dollars of bad mortgages and putting them into quote-unquote good securities. And I could go on and on and on. So these people are engaged in, I would say, a wide breadth of criminal activity, you know, fraud, money laundering, fixing interest rates, you know, I could go on and on. So, and if there is no criminal prosecution, then ultimately it becomes a business decision. You know, should I break the law? And if I do, will I get more money than I'll have to pay if I get caught? And the answer so far has been yes. So to my mind, that if it doesn't encourage further criminal behavior, it certainly isn't doing anything to inhibit it.
According to Schechter, the treatment of white-collar criminals as compared to those convicted of, quote, street crimes, such as drug offenders, is a telling statement on the social inequality in the country.
For example, cocaine. If you take powdered cocaine, you get a certain dispensation. If you take you know, crack cocaine, you're given a higher sentence. So the law tends to prosecute people who are lower class or working class people much more than upper class people. Upper class people can afford good lawyers, and they manage to get around or evade the law that way, or get, you know, softer sentences. So we're in a situation of inequities in the whole legal system that works to the advantage of people in power and the 1%, if you will, than the people who are poor and struggling or commit crimes in order to survive.
Criminals should be treated equally, but unfortunately in the real world, the poor people don't have the assets to hire a good lawyer. They have to take what they can get, and sometimes they try to defend themselves, or they get the public defender who has limited experience, limited education, so it's never going to be equal.
And how about ordinary Americans? I ask O'Connor particularly about the middle class.
We've all been affected by this, you know, the middle class and the poor people. Let's not forget them. You know, everyone likes to talk about middle class, middle class, middle class in the United States, and that's all we heard during the recent presidential election. But poor people obviously are being impacted even more, but basically the 98% of us, who aren't at the top echelon have suffered. In terms of your question about the middle class, overall middle class gross values and net worth have plummeted over the last decade. Not entirely, but largely as a result of these actions by these banksters, as we call them, who've engaged in this illegal conduct and really not been punished for it. So we've all lost money. The employment rate is still at all-time high. I mean, none of this is news. Okay, so the entire country, and in fact, really the entire world, has been impacted by this in a negative way. It continues to be. But just finally, I think that what it does is it makes people feel like the fix is in, okay? Because we all know now what these banksters were doing, what they are doing. We know that if they get caught, and they don't often get caught, but if and when they get caught, they don't normally even face criminal prosecution. And we know that the marketplace, the so-called free marketplace, is not free at all. In fact, it's fixed. So the ripple from that, I mean, let's say I'm thinking of investing in some stocks. Well, honestly, I'd be a fool to do that now.
Primarily because of insider trading that surfaced in recent months. Insider trading is the trading of a corporation's stock or other securities such as bonds or stock options by individuals with access to non-public information about the company.
Insider trading is the very embodiment of the fixed system in a so-called free marketplace, okay? And there are reasons why there are laws against using this so-called inside information when you go out and trade. And the basic reason is because the general population is not privy to that. So we don't have a level playing field. We have some people who know what's going on and other people who are out there making investment decisions essentially by throwing darts with a blindfold on.
Today, the Dodd-Frank Wall Street Reform and Consumer Protection Act seeks to make government spending more transparent as well as make financial markets more sustainable. Still, debate remains on its success as big banks seem to find new ways around regulations, and the country's economy shows little sign of growth.
The Dodd-Frank financial package of reforms is a great example of the problem. We had a financial collapse. Everybody admitted it. So the Congress, in its wisdom, passed this comprehensive omnibus bill.
Preet Bharara, U.S. Attorney for the Southern District of New York, recently wrote in an article that what might be most astonishing and disappointing is that some of the most outrageous security frauds have occurred at institutions with seemingly robust compliance programs, at least on paper. He concluded, financial fraud has been around forever. My office, which sits only steps from Wall Street, has been prosecuting white-collar crime since its foundation more than 220 years ago, and we are busier than ever.
There's a lot of pressure on these guys to perform, to bring up the returns, to make more money, to compete against other banks. It's a culture of extremely aggressive people who are fighting each other with tools of mathematics and science to battle away. And, so you have people like what they call the London whale at J.P. Morgan Chase, who took a bet and he lost $8 billion for the bank. Okay, $8 billion. And they say, well, we'll make it back, was Chase's response. So you have a culture that permits all of these devious practices, and the losers are the American people and the people of the world, because these American institutions are global institutions. They're involved deeply all over, the world.